Welcome to McPlum, simple solutions served daily.
You begin by anchoring on 3 essentials: revenue, costs, and cash. First, map each revenue stream and tag costs as fixed or variable. This reveals margin leaks. Once done, import 6 12 months of bank statements and invoices into a spreadsheet or accounting tool so you can slice by customer, product, and time. Make sure to pick one KPI to focus on: cash flow, margin percentage, or customer lifetime value, and commit to measuring it weekly as you move forward. Now you construct actionable models. Build a monthly profit and loss statement, a rolling 12-month cash forecast, and a unit economics sheet that shows contribution per sale. Once complete, run scenarios, reduce revenue by 10%, increase costs by 10%, and test best and worst cases to see sensitivity. Make sure to calculate break-even point, customer acquisition cost payback, and margin contribution per product or service. Those numbers tell you which levers to pull when you need growth. Execute the plan by applying the top 2 levers your models identified: raise price, cut a specific cost, or run a focused marketing test, and measure the immediate impact. Once done, close the loop with a weekly cadence. Review KPIs, verify cash position, and record decisions in a simple log so you learn. If outcomes disappoint, first troubleshoot data quality and timing lags, then resegment customers to ensure you targeted the right group before changing the playbook again.
Thanks for watching. Stay juicy and subscribe.